The biggest financial decision of your life isn't about money. It isn't about investing. It isn't about buying a house. And there's a good chance you've already made it, without even realizing it. Most people believe wealth is determined by financial decisions. Which stocks you buy, how much you save, whether you start a business, how early you begin investing. But decades of economic research suggest something far more surprising. One of the strongest predictors of your future financial success may have nothing to do with finance at all. In fact, it may be something so ordinary that most people rarely question it. Your address. Today we're going to explore one of the most fascinating findings in modern economics. Why two people with similar intelligence, similar ambition, and similar work ethic can end up living completely different financial lives. And why the most important investment you ever make might never appear in your portfolio. It might be the place you choose to build your life. Imagine two identical 18-year-olds. They have the same grades, the same discipline, the same motivation, the same dreams, the same potential. Now place one of them in a neighborhood filled with professionals, engineers, entrepreneurs, and college graduates. Place the other in a neighborhood struggling with unemployment, underfunded schools, and limited economic opportunity. Fast forward 20 years. Will their lives look the same? Most people want to believe the answer is yes. After all, success is supposed to depend on effort. Work hard enough and you'll succeed. At least that's the story we tell ourselves. And effort absolutely matters. But according to some of the most influential economic research of the last several decades, environment matters far more than many people realize. To understand why, we need to go back to the 1990s, because that's when researchers launched an experiment that would fundamentally change the way economists think about opportunity. The project was called Moving to Opportunity. Its goal was surprisingly simple. Researchers wanted to know whether changing a person's environment could change their future. Thousands of low-income families were given the chance to move from high-poverty neighborhoods into more prosperous ones. At first glance, it didn't seem like a dramatic intervention. Nobody received a better education. Nobody received special job training. Nobody was handed a business. The only thing that changed was where they lived. The researchers expected some improvements, safer neighborhoods, better living conditions, perhaps slightly better outcomes. What they discovered was much more significant. Years later, children who moved to better neighborhoods at a young age were earning substantially more money as adults. They were more likely to attend college, more likely to have stable employment, less likely to become involved in crime, less likely to remain trapped in poverty. One move, one address, one decision, and the effects lasted for decades. Suddenly, economists were forced to ask a question that seemed almost uncomfortable. What if opportunity isn't distributed evenly? What if where you live shapes your future more than you realize? For years, this question remained difficult to answer. Then came one of the largest economic studies ever conducted. In 2014, economist Raj Chetty and his colleagues analyzed millions of tax records across the United States. Their goal was straightforward. They wanted to understand economic mobility. Specifically, why some children grow up to earn more than their parents while others do not. The scale of the project was extraordinary. Millions of lives, millions of outcomes, millions of stories. And hidden within all that data was a remarkable pattern. Geography mattered. A lot. Children growing up in certain cities and neighborhoods consistently experienced higher rates of upward mobility. Children growing up elsewhere consistently experienced lower rates. The differences were not small. In some locations, a child born into poverty had dramatically higher odds of reaching the middle class. In others, those odds were significantly lower. What shocked many researchers was how persistent these patterns were. The data suggested that two children with similar family incomes could experience very different futures depending largely on where they grew up. In other words, your zip code was often predicting outcomes that traditional financial indicators could not fully explain. At first, this sounds unfair, maybe even disturbing, but economics isn't concerned with fairness. Economics studies reality, and reality appeared to be telling a very clear story. Location matters. The next question was obvious. Why? Why should a neighborhood influence someone's financial future? The answer turns out to be surprisingly complex, because neighborhoods are not just collections of buildings, they're ecosystems, and ecosystems shape behavior. Imagine growing up surrounded by people who attend college, people who discuss careers, people who own businesses, people who invest, people who expect their children to succeed. Success begins to feel normal, not exceptional, normal. You see examples everywhere. You understand what success looks like. You learn the paths that lead toward it. Now imagine the opposite. Imagine growing up in an environment where opportunities appear scarce, where successful professionals are rare, where economic struggle feels permanent. The same level of talent suddenly faces a very different set of expectations. And expectations matter. Psychologists have long understood that people tend to move toward what they believe is possible. The future you can imagine often becomes the future you pursue. This is one reason environment becomes so powerful. But it's not the only reason. Economists use a term called agglomeration effects. It sounds complicated. The idea is simple. Talented people tend to cluster together. Successful companies tend to cluster together. Opportunities tend to cluster together. That's why Silicon Valley became Silicon Valley. That's why Wall Street became Wall Street. That's why certain cities repeatedly produce innovation, wealth, and economic growth. When talented people gather in one place, they create opportunities for each other. One introduction leads to another. One conversation creates a new opportunity. One opportunity creates another. And eventually the environment begins generating momentum. Success becomes easier, not because individuals are working harder, but because the ecosystem itself is producing advantages. Think about how most careers actually develop. People often imagine success as a series of carefully planned decisions. In reality, many opportunities arrive unexpectedly. A recommendation from a friend, a chance meeting, a former colleague, a conversation at an event, a connection made years earlier. Researchers studying professional networks consistently find that social connections play a major role in career advancement. And where do those networks come from? Very often they come from where you live, the city you choose, the neighborhood you choose, the people you encounter every day. This creates a fascinating paradox. Most people focus heavily on salary when evaluating opportunities, but salary is only part of the equation. A job paying 20% more today may provide fewer opportunities tomorrow. Meanwhile, a lower paying position in a stronger environment may unlock opportunities that dramatically increase earnings over the long term. The problem is that these benefits are invisible at first. Human beings naturally focus on immediate outcomes. A higher paycheck is visible. A better network is not. A signing bonus is visible. Future opportunities are not. We notice what can be measured immediately. We often ignore what compounds slowly. And this brings us to one of the most important ideas in the entire discussion. Environment compounds. Not financially, socially, professionally, psychologically. Every year spent in a productive environment creates new relationships. Those relationships create new opportunities. Those opportunities create new skills. Those skills create new possibilities. The process resembles compound interest, but instead of money generating money, opportunity generates opportunity. This may explain why certain life decisions become so expensive over time, not because they're dramatic, but because they're subtle. The most expensive decisions rarely feel expensive when you make them. Choosing a city, choosing a neighborhood, accepting one job instead of another, deciding whether to move. At the moment, these decisions often seem ordinary. 10 years later, they may have changed the entire trajectory of a person's life. This doesn't mean location determines destiny. Far from it. History is filled with individuals who achieved extraordinary success despite difficult circumstances. Talent matters, discipline matters, effort matters, personal responsibility matters. But acknowledging these truths doesn't mean ignoring another truth. Environment matters too, perhaps more than many people would like to admit. Because environment influences the people you meet, the information you encounter, the opportunities available to you, the expectations you develop, and the future you believe is possible. Imagine once again our two identical 18-year-olds. At the beginning of the story, they looked exactly the same. Same intelligence, same ambition, same potential. 20 years later, one has built a thriving career, the other continues to struggle. Was the difference talent? Maybe. Was it effort? Possibly. But research suggests another possibility. The difference may have started with something much simpler: an address. And that's what makes this idea so powerful. People spend years searching for the perfect investment. They compare stocks, study real estate, analyze market trends, debate asset allocation. All important activities, but they often overlook a more fundamental question. Where should I build my life? Because before investments can compound, opportunities must exist. Before wealth can grow, potential must be developed. Before capital can work for you, you must first place yourself in an environment where growth is possible. In the end, the biggest financial decision isn't necessarily about money. It isn't about finding the perfect stock. It isn't about timing the market. And it isn't about predicting the next economic trend. It may be the decision that quietly shapes every opportunity that follows, the city you choose, the neighborhood you choose, the environment you choose. Because an investment portfolio can increase your wealth, but the right environment can change the direction of your entire life. And if decades of economic research have taught us anything, it's this. People constantly ask where they should invest their money. Far fewer ask where they should invest themselves. Yet the second question may be the one that matters most.